Hi, everyone. How are you? Welcome to our How to Money Summer webinar. So nice to see you all. So glad that you're here and able to join us. I see lots and lots of people joining. It's always awesome to see the numbers tick up. We're going to start in just a minute or two. I want to give people a moment to walk in the digital door, if you may. I'm Sarah Spagnolo, Managing Editor here at Stash. It's so good to see you. I'm so happy all of you took time out of your very busy days to spend a little bit of time with us talking about emergency saving and goals. Such an important topic on this Thursday afternoon. Great to see you all. Thank you. Thank you again for joining us. Just give it one more minute and we will get started. We have such a packed agenda. It's going to be a really exciting night or afternoon, wherever you are. Again, thank you so much for coming. All right. Many people here, so I am going to get started. Hi, everyone. Again, I want to thank you so much for coming tonight to this webinar. It's part of our How to Money Summer campaign. Hopefully you've heard of it. It's 3 months of webinars and activities to help you hit your money goals. It's plus a sweepstakes where you can win $150 for turning on AutoStash for at least 3 consecutive months and registering for a webinar. So everyone here, you are already on your way to eligibility. Congratulations. I'm Sarah Spagnolo, Managing Editor. Thank you again so much for coming. Let's get to it. I recently had the unfortunate circumstance happen to me where my car needed both new tires and a new battery at once. There really wasn't any other option than to just do it, to pull from savings and to spend on the expense. I take my kids around in that car, it's got to function. To say it threw my budget into a ride during an already expensive month is an understatement. That was funny with my camera. Hope y'all can see me. But you know, this happens to people, right? Maybe it happens to you. I'm not alone in this. A safety net for situations like this one is so critical. And we know through our research that without a safety net, people are less likely to stick with an investing program. So that's why we're here tonight. That's why we're here together. We're here to help you ensure that you can get started on that safety net. And we believe that the fastest and best way to do that is with Stash. Which brings us to our webinar today, all about emergency savings. We have an incredible agenda. We're going to hear from our friends at Commonwealth. They're a national nonprofit organization dedicated to improving financial security and opportunity for people in the United States. Over 2 decades, Commonwealth's work has enabled over 2 million people to save $8 billion on the path to greater financial security and wealth. Tons of that research is on emergency savings and will all help us understand how people think about emergency savings and the build, use, and rebuild model. Then I have even more for you tonight. We'll hear from a product manager at Stash who will take us through the latest updates you can expect to see in your Stash app now, which will help you build your safety net faster. Lastly, I've invited Doug Feldman, maybe you've seen him before on previous webinars, Stash's Chief Investment Officer, to join us today and to answer all the questions you might have on emergency savings. Those questions can go in the Q&A section of your Zoom app. You can see it at the bottom here. So ask those questions and we'll do our best to get to them by the end of the webinar. With that, I'm going to introduce Natalie from Commonwealth.
Thank you so much, Sarah. I'm just going to pull up my slides. All right. So thank you, Sarah, for such a warm introduction. Like Sarah said, my name is Natalie Blaine. I'm an Associate Director at Commonwealth. It really is my pleasure to speak to you all today about the work that we do at Commonwealth and, importantly, how emergency savings is foundational to financial health. So what about Commonwealth? We are a national nonprofit that focuses on building financial security and opportunity for financially vulnerable people. And we really do this through our innovation and partnerships. For over 2 decades, Commonwealth's fundamental purpose has remained to create a stronger and more prosperous society where everyone has financial opportunity. So Critical to our impact is collaborating with partners in solution. So people living on lower income, employers, record keepers, innovators, and really business, community, and policy leaders, so that we can really make financial security a priority. And so this slide really shows you examples of the partners that we've worked with. And really, we want to kind of shout out for Stash for being such a great partner in collaboration. So my slides got a little bit mixed up, so I'm just going to go back a little bit. But what exactly is emergency savings? So, Sarah, you gave such a great example earlier about how it can happen to anyone in just a car repair. But emergencies, we may all experience emergencies at one point at another. And so emergency savings is really there to help prepare you for the unexpected. It's a liquid savings that can be used in emergency and is foundational to financial security. And why save for an emergency? So, as I mentioned, emergencies can happen to anyone at any time. Here are some examples of common emergencies. So, that can include car repairs, like Sarah mentioned earlier, medical bills, home repairs. Again, this list is not exhaustive, but this is just example of emergencies can really occur. But the point is, we really want to kind of emphasize that building emergency savings can help you become more financially secure and offer stability for the future. Uh, we mentioned build, use, rebuild at the beginning of this program. And so I think this visual is really great to kind of explain how emergency savings can have, profound positive impacts in people's lives. So when an emergency occurs, like maybe there's a car repair that you need to do, if there's no like liquid short-term emergency savings to draw from, folks might have to take on debt. And their expenses can really snowball, especially when trying to pay down that debt. But with emergency savings, initially over time, can really work to build the savings. And then when something, inevitably probably happen, you have that opportunity to use the savings that you've built over time without necessarily having to take on debt. And then, once the savings has been used, then the rebuild can happen where you continue to contribute to your savings and with that, rebuild savings over time. And the hope is that contributions to long term investments can really continue uninterrupted and untouched. So, how can I save, right? Really, you can just start small and watch your savings build over time. So, set a savings goal. Start with something that's reachable, that's realistic, that makes you excited. Then set it and forget it. So you can really make savings easy by setting up automatic transfers from your bank, your paycheck, or your bank account. And then celebrate progress. I think this is really important and one of the most fun parts of this. At Commonwealth, we say that savings is a journey. So remember to treat yourself when you hit your savings milestone and really remember that this is going to be like an ongoing thing that you can do and that it's a journey. So saving just $20 every 2 weeks can lead to at least $500 in savings a year. And for Stash customers, average account balances for customers who've made at least one auto stash after just 1 year is $919, which is really great. One thing that folks sometimes ask is, where can I save? And choosing the right option really depends on your needs and your preferences. And so this slide talks about a little bit about the product features, but really there are many different ways for you to save for emergencies. And here are kind of features that if you're interested in, you can do research or consider when trying to choose a product. So there's no or low barriers to entry, no requisite minimum account balances, low or no fees, no restrictions, which is really important, especially around withdrawals and usage. Liquidity, that's super important. If there's something that happens unexpectedly, you want to be able to really access that easy and quickly. Other things for you to consider, transparency around all account features. So just understanding what the different account features entail. Portable, this really has to do with if it's a workplace specific emergency savings. You want to be able to, if you were to leave your employer or leave the workforce, that you're able to still access your account. And then other things to also look at: principal protected, and then auto enrollment with opt out where it's legal. So right now I'd like to pass it along to my colleague, Emily, who's going to talk a little bit about a national study that Commonwealth is leading.
Thanks, Natalie. Hi, everyone. My name is Emily Bergman, also with Commonwealth. And Commonwealth is starting a new research project with the goal of better understanding investors and the choices that you make. As you can see, I have a QR code here on this slide, which is linked to our screener for this project. So if you're interested in participating, go ahead and use this QR code to fill out the screener survey now. And I'll give everyone a minute to get their phone out and scan the code. While you're taking the screener, I did want to outline a little bit more about this study. So the screener survey should take no more than 5 minutes to complete. And about the project lasts 18 months. And over the course of 18 months, we will ask that you provide check-ins via phone call 9 times, totaling about every other month, about your experiences investing. So you can call at a time that's convenient to you. And for each check-in call, you'll receive a $40 gift card, which totals $360 in gift cards over the course of the study. If selected for the study, we would go into the details of the project more in depth to ensure that you are consenting and comfortable with each component. And we are looking for folks that primarily have under 5 years of investing experience. In addition to incentives, you'll also be helping to make the investing landscape more inclusive for everyone. So I also wanted to cover some typical questions that we're getting about this research study. And the first question is, do you need a specific amount invested to participate or a lot of experience with investing? And the answer is no. We're not looking for a specific amount you've invested, and also you do not have to have a ton of investing experience to apply. The other question that we've been getting a lot is about the check-ins. How long do they last? So each check-in will depend on how long you'd like to chat about your experiences. You are able to call in during a time that's convenient for you, and you'll be prompted to answer questions during the call. Often they take about 20 minutes to complete. So of course, the QR code is here on the slide. And if you're interested in applying but didn't have the chance to take the screener now, don't worry. An email will come out with a link to the screener after this webinar. And that concludes Commonwealth's presentation. If you have any questions, please feel free to reach out to myself or Natalie. And if you're interested in learning more about our research, go to buildcommonwealth.org. And I will now pass it over to our next guest, Lisa with Stash.
Emily, I was going to step in and introduce Lisa real quick, if you don't mind. It's me again, Sarah from Stash. I wanted to introduce Lisa Fincham, who's a lead product manager at Stash. Terrence, you asked a question about when we were going to be doing our latest updates, and the answer is we have the answer for you right now. It is Lisa. So Lisa, will you please take it away?
Yes, thank you so much, Sarah. Let me share my screen. And hopefully you're able to see. Thank you, everybody. Thank you, Sarah. Again, my name is Lisa Fincham, and I am a lead product manager at Stash. And I am thrilled to be here with you all tonight to introduce and demo a new feature within the Stash app called My Goals. And My Goals is designed to help you plan and take steps to meet your short and long-term goals through investing. So whether that is your next big vacation or your child's future, an engagement ring, or an emergency stash that we've heard so much about the importance of tonight. We provide the tool for you to set up your goals, but also the steps and advice that you need to then reach your goal to get there. So with that, I'm going to show the demo. So you can go to the My Stash tab and create a goal. I'm going to name this goal Safety Net. No points for originality here. And then I can continue. And I can set my target amount. I'm going to say $10,000. And then I set my target date as well. So I'm going to say June 1st of 2026. And this then tells me the amount that I need to aim to invest or set aside each week in order to hit that goal. Now, if that's not doable for you, or maybe, if that doesn't fit your budget, you can always, work with the target amount and the target date to help you find whatever would fit in your budget. I think the important thing is, and that was alluded to earlier, any amount is a good amount, and that any progress that you make setting up and executing your goals is a win and should be celebrated. So now I can go create my goal, and Stash is then generating my recommendations. So with my recommendations, we're again reiterating the amount that we think that you should invest or set aside each week, as well as the stash account or portfolio that would best align to your goal. So for this particular goal, this emergency stash that is a short-term goal within the next 3 years, we are suggesting a curated collection of investments that are actually geared towards short-term gains for short-term goals. So you can peruse the options that we are providing to see which one would best align to what you're looking for. And you can then select the one and auto stash, set up an auto stash for that ETF. So in this example, I am going to set up that $97 that I want to invest each week. And this will automatically set me up for $97 to invest weekly in this JPST, this short-term ETF. And that is it. I am done, and I am ready to meet my goals. I'm on my way there. So we're so excited for this feature that it is launched. It's only been out there for a week, but we invite all of you to use this tool and let us know how it is. Just download the latest version of your app and check it out. So thank you so much. With that, I'll send it back to Sarah.
Thank you, Lisa, so much. Everyone here at Stash is so excited to bring this latest update to all of you at home. So do hope that you'll check it out. A couple questions about the different sweepstakes that we've been talking about. So there was the screener and the survey that Commonwealth talked about. The sweepstakes that I mentioned at the top is the How to Money Summer Sweepstakes. You have to register for one of 3 webinars, this being one of them, as well as turn on Auto Stash for 3 consecutive months, either turning it on now, or if you have it on already, you're qualified. And that is the sweepstakes for $150. All right, so now that that's behind us, it is my total pleasure to introduce Doug Feldman, Stash's Chief Investment Officer. Doug is a total expert in this world. He advised millionaires and fancy people. He's worked in finance for decades. He knows his way around all of these topics. So Doug, will you join us this afternoon or evening to answer some of our customers' great questions?
Hey, Sarah, of course. Welcome, everybody. I'm so thrilled to be here tonight. Always happy to talk to Stashers. Always, my dream in life is to help everyone get the access to the financial advice they need to help people get on the road to building wealth. And so I think this is an exciting topic today, talking about emergency savings, something that is a challenge, I know, for many Americans that are living paycheck to paycheck and struggling. So happy to answer any questions that the crowd may have.
Great. All right, so we're tracking some questions, and I think the first question is just like a general question, which is, if I really want to build an emergency savings account, where should I invest?
Okay, so Sarah, this is a great question, and knowing where to put your emergency savings fund, super important, right? If you don't know where it is and you can't access it, then it's not really so much of an emergency savings fund. So let me, if it's okay, I would draw a distinction between two types of emergencies and two different ways you may want to save for them. So the first is what I characterize as that emergency liquidity fund. The emergency liquidity, and Sarah, I did not know about your car, so I'm sorry to hear about that story. But this happens every day to Americans, people across the world. All of a sudden, a incident happens, and you need immediate availability to buy a new set of tires. You need $500, you need $700, whatever it is. So for this emergency liquidity fund, it's the key important thing here is to have 24/7 access. So that could be things like having money in a checking account or a high yield savings account. And features that you would want in this is maybe debit card access, ATM access, check writing ability. So really, in the event of an emergency that is, let's call it crisis oriented, you need the money right now, liquidity is key. That's what we'll talk about as more of an emergency liquidity fund. And that's sort of probably in the $500, $1,000 range just to meet those immediate needs. What we're talking about here today is probably more of what we describe as an emergency savings fund. And an emergency savings fund, a good rule of thumb, and it's going to be different for everyone depending on your circumstances, but a good rule of thumb is to think about having 3 to 6 months of savings put away in case of a bigger emergency. Now, a bigger emergency would be, God forbid, a job loss or a long-term medical issue. Or you mentioned having an issue with your car, but maybe you have a house and you have a bigger issue that's going to take, a while to fix. So for that, we like to say put away 3 to 6 months. It depends on the circumstances. Some people might have young kids, and so maybe having a bigger cushion is more important. Some people might be single and living alone, and maybe they could get away with a smaller thing. So the question you had asked is where do you put that money and how do you get it? So in the instance of the 3 to 6 months savings funds, instant 24/7 liquidity, not as important. Having access to your money and being able to get to it within a few days when necessary is important, but not, you may not be running to the bank that night for the money. So with that, there's the opportunity to maybe grow your assets a little bit and, benefit from interest rates or yields, and we could talk a little bit more about that. But for that, you need to still be, because of emergency saving funds, take very little risk. And that's why on Stash for this, we recommend some very short-term bond funds, whether they be investing in U.S. Treasury funds. So, an example, an ETF like T-Flow, or JP Morgan has a great fund called the JPST, which is a JP Morgan short-term income fund, I believe. These can give you a yield of over 5% today. And I can never say anything is without risk, but I would say that these are extraordinarily low risk, things that, over time will work. The downfall to these is, again, you're not having 24/7 access, but these are great opportunities for these longer term funds. Outside of Stash are other places, some, high yield money market accounts. You could buy U.S. Treasuries direct from the IRS. Again, there are pros and cons of each. Some people like CDs. I don't recommend necessarily CDs for this type of thing because CDs have terms. So you may have to be invested for 3 months or a year before you get them. So not necessarily as good. You want stuff where you'll be able to get access to your money.
That's a comprehensive answer, and I think that's Pamela did, as always, does, full of details. Pamela has a related question, which is, how can I pull my funds if I need to have access to my money? So you've talked about where and how we can invest, but then what happens when you actually need it?
Yeah, that's a great question, Pamela. So going back, just to clarify again, in the emergency liquidity fund, whether that's at your bank or wherever that is, you all, in something like that, make sure you have access, make sure you have a debit card, make sure you have an ATM card, make sure you have a check writing ability so that you can have access to that funds. In the instance of this emergency savings fund, and I could talk a little bit about the experientially what it would look like at Stash, which might be helpful. So at Stash, if you invest in any of these ETFs, your money is invested. In order to get access to it, you would need to go into the app. You would need to hit sell. That, by the time that clears, I don't want to give the exact days, but a day or two before it clears. And then you could have immediate access to it by instantly moving it to your Stash bank and having access to through your Stock-Back debit card. Or if you want to transfer it to an external bank, that usually takes about 1 business day. So you're talking usually it's about 3 business days from the time that you would start wanting the money. So again, not ideal for a 24/7 thing, but for a longer term emergency, totally appropriate.
Yes, and I do want to clarify that the Stash Stock-Back card is available in partnership with our banking partner, Stride Bank, which is the required information to share with all of you. So definitely want to clarify that. All right,
Thank you,
next
Sarah.
question. Damika, how do you decide how much to save based off how much money you make? I always hear about the 50-30 budget. Should your goal be 20% of your paycheck? That's how much to save.
So great question. I think it was Damika, I believe. Thank you for the question. A wonderful question. Rule of thumbs are rule of thumbs. And yes, there's a 50-30-20 rule of thumb in which you would say to put away 20% of your money into savings or investing. That is a great target. I love when I hear people that are putting away 20% out of every paycheck into either savings or long-term investing. Fantastic. But I want to be real here. Unfortunately, many people in this country are living paycheck to paycheck. And many people in this country, it's difficult to come up with that 20%. And at Stash, we understand that. So while sure, I would love for everyone here on this call to be taking 20% of their paycheck and be, putting it into a long-term retirement account and building their savings fund and saving for their kids' college education, wonderful, sitting in an ivory tower. But the reality is we know that people are living paycheck to paycheck. And so what we do recommend is do what you can. And it's surprising, the habitual nature, even if it is putting $5 away each week, over time, it makes a difference. And what you could see and what we've learned from many people is that it starts with $5. And then the next thing you know, maybe a couple of weeks later, you say, hey, wait, I can actually do $10. And then that $10 becomes $20. And before long, all of a sudden, you're thinking more about, hey, I should be saving for my future and finding that money. And, we have some tools on our app or in some of our Learn content about budgeting, and we have some other exciting features that will be coming soon for the greater audience. For those of you on Android, you may have seen something. I don't want to spoil it for everyone else, but there's some good tools coming in the app that can help with, giving you some advice and guidance on how to save and put money away.
Thanks, Doug. All right, so we have 2 kind of related questions. One from Diamond, who says a really good question, which is, this may be rudimentary, but what is an ETF? I've heard it before, but need to be reminded. And Cassandra says, for the suggested investment options for the saving goals, are they mutual funds or individual stock options? And I'm pretty sure you're going to connect both of those things together.
I will do my best. So I got Cassandra asked the second. I didn't catch the first name. I'm sorry.
Diamond.
Thank you. So what is an ETF? So an ETF is an exchange traded fund, but you don't need to know that jargon. What do you need to know? An ETF is an investment. It trades like a stock does on the stock market, but think about it as like a basket that holds other things, other investments. And there are lots of different ETFs out there. There are some ETFs that invest in stocks. There are some ETFs that invest in bonds. There are some ETFs that invest in commodities. And I don't expect everyone on this phone to understand exactly what all those are, but just think about it as a basket or a fund that holds other investments for you and enables you to get access and exposure to lots of different things. At Stash, we truly do believe in ETFs as a great low cost, because they generally have very low expense ratios, which means they're not taking money from your pocket and putting it into their pocket, and it's a way to get diversified, great investing. So then Cassandra asked the second question, which was the recommendations in that Lisa showed for those short-term things. What are they? Are they stocks, ETFs, mutual funds? Those are actually ETFs, but those ETFs are, we have three that we recommend for short-term savings right now. Two of them are invested in US Treasury bonds, so very ultra short-term US Treasury bonds. Now, if this is too much for a lot of you, I'll just, in very simple terms, the US government sells bonds to the public. You may have heard that we have a lot of debt outstanding. This is income paid by the U.S. government to you. It is about as safe as an investment as you could come. Very short term, so you don't have to worry about interest rate moves, and you get it. But this is an ETF that holds lots of U.S. Treasury bonds. There's a third one on that we recommend, which was the J.P. Morgan one, which I discussed before, that invests in slightly different things. They invest in some corporate bonds and stuff like that, but again, very short term, so it's also extraordinarily safe stuff.
Thank you, Doug.
Yep.
You didn't even talk about our managed portfolio. I thought maybe you were going to veer right into that.
I know I normally do talk about our managed portfolio, and I will. Can I tease something on this call, or am I not allowed to do that?
I think you should just talk about what we have now.
What we have now? Okay, great. So for those of you interested in long-term investing, we have what we call these managed portfolios that we go by right now, the smart accounts, and you may see those and you think smart portfolios. Those are managed by me and my team, where we look at the overall markets and we choose ETFs that provide you the best exposure for your risk profile. They're perfectly geared for long-term investing. I want to just, clarify here, because this call is about emergency savings, not necessarily great for emergency savings because they're very long-term in nature and very focused on growing wealth over periods of years and stuff. But for those of you looking to invest in I speak very highly of it. The best way to do it, diversified, long-term, they will get you where you want to be over that period of time.
All right. Thanks, Doug. Can't believe it took this long for you to get there. But anyway, all right. Lots of questions here about like a tool. I hope I pronounced that right. How do emergency savings differ from other types of savings? And then many people, Christina and some anonymous people, asking like rules of thumb for how much to have in that liquid emergency fund. So maybe you can talk about both of those questions together.
Sure. In terms of the liquid emergency fund, so again, I want to just clarify here. To have, for liquidity needs, everyone is very different, and everyone could have a different, different circumstances and stuff. There was a study, and I don't know the exact statistics, so I'm going to butcher it a little bit, so excuse me. But during COVID, it was out a lot that like a large percentage of the American population couldn't come up with $750 in the event of an emergency. Sarah, you may know their statistic better than I do. But what we would like to see for liquidity, if you could have $500, $1,000 put away that's accessible 24/7, I think that's a good number to aim for. Then for the longer term emergency savings fund for an event that you lose a job or whatever, I think the rule of thumb that the industry likes to talk about, and this is not just Stash, but most financial advisors will recommend that people have about 3 to 6 months put away. Again, that is different depending on each circumstance. Now, I apologize, Sarah. I messed up. I forgot the first part of the question.
The first part of the question was, what is emergency savings? How do you think about it?
What is emergency savings just in general? So again, emergency savings is the buffer you need to ride you through an unexpected event, whether that be, an immediate crisis or something that lasts for a little bit longer. And I think the team from Commonwealth on their chart, I know charts are not for everyone, but I liked it. It was one that was a little bit wavy and showed, for those people that don't have emergency savings funds and don't have money put aside, what typically happens is if you have a credit card, you go onto your credit card and you charge something, or you have to take out a personal loan. And while I understand the need for having debt and taking loans, there are some instances, such as credit card debt, is really, really brutal because credit cards can be charging 25% a year interest, 30% a year plus interest. Once you get into the spiral of having heavy burdens on your credit cards, it's really tough to get out of. So think about these emergency savings funds as a way to give yourself a buffer for the unexpected, so that you don't have to put yourself in debt and don't have to go after higher interest rates.
Right. And you can answer the rest of this question better than I can, but in terms of how it's different than other savings, right? You might also be saving for retirement or for your children's education or for a vacation or other things. And emergency savings has a very particular use, which is to be available when you need it.
Perfectly said, Sarah. That's exactly right.
Okay, great. All right. So many awesome questions here. Yes, by the way, there will be a recording of this event, keynote, and many people asking that question. So don't you worry. Let's see. What would you recommend? This is from Brianna. Doug, this is a great question, especially because I know you have a daughter about to go to college. So what would you recommend for a college student trying to better themselves for the future?
Okay. Brianna, that's fantastic. Yeah, I have so Brianna, if I understand the question right, you don't have a child in college. You are in college, which is congratulations to you. I have a son in college and a daughter soon to be now. So a couple of recommendations I would have is that the road to wealth building begins today. And the best thing that you could do for yourself as you start getting into the workforce and leaving college, and once you get a job, is to put a little away out of every paycheck. So we talk about, some firms offer employer-sponsored retirement plans, like a 401k plan. If you go to a firm that does offer that, especially if they offer employer matching, take advantage of that and put some in there, because free money is always the best. But as you start getting into the real world and you get a weekly paycheck, think about that. And somebody asked the question earlier on, is 20% a realistic number? Again, I don't, Brianna, I'm not sitting with you. I don't know your exact situation here, but 20%, if you could put that much away out of each paycheck into whatever it is, some into your retirement savings, some into your longer term savings. Maybe one day you want to aspire to own a house or whatever it is. Little bits, and if you could figure out a way to put a little bit out of each paycheck away, that's going to go a long distance for you. And presumably, if you're young, you have a long life ahead of you, and like starting now will make it, when you get to my age, it'll make it a lot easier for you.
Awesome. All right. I think this is going to be our last question, and again, people I think are always so worried about selling investments, right? That we've had a handful of questions about this. This is from Anonymous. So is it a good idea to sell your investments for an emergency if the cost is a significant amount, for example, more than your savings, and then followed by continuing to invest in your goals?
Yeah. Great question, Anonymous. It's hard, right? Like if you don't have the savings put away, sometimes you do have to think about selling some of your investments or liquidating stuff to pay for it. When the choices are between, selling part of your investments or as part of your investment portfolio, or taking out a personal loan or going into credit card debt, it is preferable to sell your investments. The problem with that is that it knocks you off the road for a little bit, but you're better off doing that rather than putting yourself into debt that you won't be able to pay off, because it's more likely than not that your investment portfolio won't grow faster than the 30% interest that you might pay on a credit card debt. So unfortunately, that is some of the situation. But what's good is if you have built up a little bit of a safety net in terms of your investments that you could sell, is that means to me that you actually have experience investing. You've learned already that you can do it. And that's the most important thing to take away, is that if you've done it before, you can do it again. And yes, life throws curveballs at you and there are setbacks and all that. But if you have experience, do what you did before to get you where you are today. Like, so if you've saved up $5,000, $10,000 or more than that, that means that you have the capability to do it again. So believe in yourself, believe in that ability, follow what you did before. And, I'm sorry for whatever the emergency is, but you will get yourself back on track.
Such good, encouraging advice. And I know I said that was last question, but I have two others that I just think we should answer, but you have to answer in short, succinct answers, Doug. Good?
I will try my best.
Okay. Ruth, is day trading a good thing or a bad thing?
In my eyes, day trading is a horrible thing. Horrible. There is numerous studies have shown that day traders are unprofitable and lose money. Day trading is the concept of buying and selling a security off of short-term movements. And I just have to make everyone aware here. You are in a market fighting against hedge funds that have spent billions of dollars building algorithms that can trade faster than you can. And any system you see, anything you see on social media touting this day trading experience, more often than not, people are losing money on that. So I am not a big believer on it. And I would say if you do want to day trade, not going to prevent you, but I know Stash is not the place to do it. We have trading windows, which are speed bumps, which, we want to slow you down. We want you to be thinking long term. We don't want you to be making emotional decisions based on the ins and outs of the markets.
Thank you, Doug. All right, real true last question from Janine. I honestly live paycheck to paycheck. The only investing I currently do is bi-weekly via Stash. What do you recommend I invest in?
Well, Janine, I thank you for the question. I do appreciate that you're living paycheck to paycheck, like probably many of the other people on this call. So, kudos for you for, getting through the previous week, and you'll get through the next. The best thing you can do is, this is where Sarah, I will tout our managed accounts. Over the long term, a diversified portfolio like your smart portfolio will pay off. And if you put a little bit away each week, I don't care if it's $5, $10, $20, whatever you can afford to do, Janine, over time, and I'm not saying that time's not 3 months or 6 months, it's more like 3 years or 6 years or 10 years or longer, that will grow. And all of a sudden, you won't be thinking about living paycheck to paycheck anymore. You'll be looking at your account and say, wow, I put away a lot of money. So, good job for you for getting through each week, and, good job for you for investing what you are.
All right. Well, thank you, Janine. Thank you, everybody who asked amazing questions. Thank you, Doug. Thank you to all of our panelists today. It's my job to close us out. Again, thank you to everyone who joined for our How to Money Summer campaign. The information we shared today is purely educational. We are not providing any personalized financial, legal, tax, or investment advice. I'm going to put back on the QR code. I know many of you were asking for it. Here you are. As a reminder, everyone, in addition to this great opportunity here to participate in the Commonwealth study, Everyone who registers for at least one webinar and turns on AutoStash for 3 consecutive months or already has it on for 3 consecutive months is entered to win $150. Our next webinar, in case you're curious, it's Thursday, July 18th with Doug again. He'll do money advice live. So we'll talk about the state of the stock market, the impact on the election on your investments, and he'll take even more of your questions live. Be sure to register and join us. I want to thank you all for taking the time this afternoon and evening on your busy days and your busy weeks. Thank you so much for joining us and wishing you a wonderful end of the week and weekend ahead. Thank you so much.